By the way, in full disclosure, I did own SOFI during the last bull run. And as usual, at the end of the year, I get out of my position. So, but according to this question is from VBrank. Faster horse, SOFI seems to be on the upswing with a court ruling to restart federal student loan payments. Would you hold or sell out of the position to acquire more Solana or Tesla? So this is interesting. And just so people outside the US have the background, SOFI is like a startup, fintech type startup. According to a recent S&P Global Market Survey, they believe they could increase their loan originations by 20% because of this new court ruling where the government is forgiving loans and they can refinance them, etc. And that could be huge in the third quarter of 2023. So a lot of people are very bullish in SOFI, and that's reflected in the chart, which I'll show you in a minute. And the report also estimates that their lending business could increase by 10% because of this. So let's look at some key ratios on the financial side. And according to this, I looked at some just basic stuff. I didn't do a full deep dive, but price to sales of 1.46, enterprise value over EBITDA, 42.2%, EBITDA compound annual growth rate, 36.6%. It's growing fast. Return on equity, 10.8%. Cost of equity, 8%. Watch that. I'll talk about that in a minute. Perpetual growth rate, 2%. I think they're currently growing a lot faster, but we'll see. Fair price to book ratio is 1.47, and their trailing price to book ratio is 1.46. So when you look at all of this stuff, and the market is constantly changing, but these valuations seem very, very fair. So the question is SOFI overvalued or a good value or fairly valued? I would say it is very fairly valued right now. The question is, though, what's going to happen? There is a key thing I'm a little bit concerned about. They have a very large debt load. They have $6.2 billion in debt, and the SOFI's net debt to equity ratio is about 66%, and that is very high. Thank you, Mr. Jim. I see you out there. The competitive landscape as well. SOFI is well positioned currently, but it's changing fast. And who knows, maybe Square or other places will try to get in. And also the macro environment is improving. Interest rates do impact their business, sort of. So that could actually be a tailwind for them as we go forward. Let's look at a chart from Wall Street. Here, SOFI revenue and earnings, you can see their revenue is growing really well. But what I don't like, especially in this type of market, I do not like companies with a lot of debt, and I do not like companies that are not making money. That means debt just grows. And here you can see their earnings, even where we are now, they lose about $300 million a year. And they lose nearly 20 cents on the dollar for every dollar of service they have. So that's not good. And I have no line of sight to their profitability. Now, that being said, the chart does look pretty good. They are 63% off their all-time highs. We know stock markets can be very irrational, but the trend is definitely up and to the right, being pumped by this student loan forgiveness program. So who knows? Could go back to 25, 28. Previous all-time high. It's now about, I think, $9. So from that perspective, you never know. Things in this frenzy of a market, things can get very, very inflated. So if I was a betting man, would I go long or short here? I'd probably go long. But I do not own SOFI, and I would not buy it. So